In this segment, we will look at the over or under allocation or over or under application of factory overhead. In this episode, we will look at the over or under allocation or over or under application of factory overhead. Recall that when overhead is allocated into goods in process or applied into goods in process, that application was done using a predetermined overhead rate. That predetermined overhead rate was based on estimates. The estimate was used because we do not know exactly how much overhead we are going to be incurring. Overhead is not incurred evenly or uniformly during the year, and it might vary from month to month. For those reasons, using that predetermined overhead rate and applying an estimate makes it possible for us to estimate job costs sooner. Because that predetermined overhead rate was entirely based on estimates, it is most likely that the actual indirect costs are going to differ from the estimate of indirect costs. The result will be either an under application or an over application of overhead, and the cost of goods sold would need to be adjusted at the end of the period. So if we were to take a look at it in T account form, recall that as actual indirect costs are incurred, we are debiting factory overhead for the amount of those indirect costs and crediting cash or crediting the appropriate account, however that indirect cost is paid for or accounted for. As we are recording an estimate, we are debiting goods in process and crediting factory overhead for the amount of that estimate. What will happen is at the end of the accounting period, we will be left with either a debit balance or a credit balance in that account. If we are left with a debit balance, it means that our actuals were greater than the amount that we had estimated and applied into goods in process. Under applied. We didn't apply enough. However, if our estimate or applied overhead exceeds the actual indirect cost incurred throughout the period, we will be left with a credit balance. We were over applied. We applied more as an estimate than what we actually incurred in indirect costs. So in order to correct that at the end of the period, if we are under applied, it means that our actuals were more than our estimate, which means that the amount that was recorded into goods in process was too low, which means as those inventory items were sold, cost of goods sold is too low. So in order to get rid of that debit balance, we are going to need to credit factory overhead and debit cost of goods sold. That journal entry would increase cost of goods sold and clear out the balance in factory overhead. However, if at the end of the accounting period, we are left with a credit balance in factory overhead, it means that our estimate was more than what the actuals were. The amount we applied into goods in process was greater than what we actually needed, knowing what our actuals are now. So if we were over applied, we are left with a credit balance in factory overhead, which means our cost of goods sold was too high because we recorded more overhead in goods in process, which was then transferred to finished goods, which was then recorded as cost of goods sold when the inventory was sold. So to correct that, we are going to debit factory overhead and credit cost of goods sold. That journal entry will decrease the amount of our cost of goods sold and clear out the balance in the factory overhead account. So after this adjusting entry is recorded, factory overhead will be zeroed out. So here is our journal entry for under applied overhead. Debit cost of goods sold, credit factory overhead. If we are over applied, we would debit factory overhead and credit cost of goods sold. After adjustment, the factory overhead account is 0. It's cleared out, and we're ready to start recording overhead costs in the new accounting period.